Okay, so real talk. For decades, literal decades, the FICO score has been the only game in town when it comes to getting approved for a mortgage, like cool kids table level Monopoly. But the lunchroom just got rearranged. There's a new credit score model in town, and it's about to shake up how millions of people qualify for home loans. This could be the biggest news in mortgage lending in years, and yes, it might just help you or someone you know buy a home sooner than expected. So here's the scoop, straight from an announcement made July 8th by Bill, director of the Federal Housing Finance Agency. As of this new shift, the mortgage giants Fannie Mae and Freddie Mac are officially opening their doors to another credit score model, VantageScore 4.0. Now don't worry, FICO's not going away yet, but lenders will be able to use both models, and here's why that matters. VantageScore doesn't just look at your traditional debt like credit cards or car loans. It also takes into account rent payments, utility bills, even phone bills. That's right, your ability to pay your Wi-Fi on time could actually help you buy a house. Tony Hutchinson, head of public affairs at VantageScore, put it this way: more of what's on your credit report will now count, and that empowers consumers. Here's the part that made me actually pause mid-coffee sip. VantageScore can score 33 million more people than FICO. Of that group, 13 million have a score above 620, which is the magic number of Fannie Mae and Freddie backed loans. And according to Hutchinson, about 5 million of those could actually afford a home. So yeah, this isn't just a minor software update, it's like switching from dial-up to fiber internet. Does anyone remember those days? If you've been one of those folks who's responsible with money but didn't have enough traditional credit to prove it, this could be your moment. When does this start? Now, for the don't pack your boxes yet moment, we don't have an exact rollout date. Fannie and Freddie still need to upgrade their systems and loan pricing models to accommodate the new scoring formula. Translation, this is coming soonish, not tomorrow. But if you're planning to buy in the next 6 to 18 months, this is worth tracking, and we'll be keeping tabs right here on this channel. Will this save money? So does this new credit score model save you money? Well, maybe a tiny bit, but don't go budgeting it towards your new backsplash. Lenders have been complaining about how FICO raised their fees from $3.50 to $4.95 per score. Yeah, not exactly Netflix pricing, but even with that, FICO only makes up about 0.2% of your closing costs. Like FICO CEO Will reminded us, with average closing costs at $6,000, our fee is barely a blip. And Hutchinson from VantageScore agrees it's a small portion, but hey, any downward pressure on fees is better than none. What this means for buyers. So if you're buying in Boise or anywhere really, this is excellent news. If your FICO score never really told your whole story, you've been consistent with your rent, power bill, cell phone, you might finally get credit for it, literally. And if you're not sure how you stack up under this new model, talk with your lender, or hey, call me, we'll figure it out together. This is one of those rare mortgage updates that feel like progress, like we're finally seeing the system modernize a little. Make sure you hit subscribe if you want more smart breakdowns like this, especially ones that actually matter to Boise buyers. And if you're thinking about buying soon, make sure to click the link below to get to my ultimate free resource hub for buyers. Until next time, keep your credit strong and your dreams realistic, and your Wi-Fi bill paid on time.